All right, welcome. Today, we're doing more than just looking at a stock. We're running a masterclass on a professional grade trading strategy, and we're using SoftBank as our live case study. We're going to skip the hype and the speculation and get right down to what actually works in the long run: a solid process, ironclad discipline, and just flawless execution. This sentence right here, this is everything. It's the data-backed conclusion of our entire analysis. It's our North Star. So over the next few minutes, we're going to break this down piece by piece. I'm going to show you exactly how we got to this conclusion and, more importantly, how you can build a professional trading plan around it. So here's our game plan. We're going to move through these 5 sections one by one. Each part builds on the last, giving you a complete structured framework for how to approach not just this trade, but really any trade with the precision of a professional. Okay, let's dive right into our first section. You see, before a professional ever puts a single dollar at risk, they need to understand the why. Why this particular stock, and why right now? This is the bedrock. It's the foundation of our entire trading thesis. It all comes down to this number, 4.44 to 1. This is the heart of the thesis. And what this really means is, for every single dollar we are prepared to risk on this trade, our analysis shows a potential reward of $4.44. This, right here, is the mathematical edge that separates a calculated professional trade from a pure gamble. And this chart just lays it all out beautifully. Think of this as our battle map. That black line, that's where we get in. The red lines down below, those are our safety nets, our stop losses. And those green lines climbing up, those are our objectives, our profit-taking targets. We're going to dissect every single one of these levels. Our whole strategy is built on these 3 pillars, and they absolutely have to work together. A great entry point is completely useless without solid risk management. And risk management doesn't mean a thing if you don't have a plan to actually take your profits off the table. You master these 3, you master the craft of trading. Simple as that. So let's get into the practical side of things. How do we actually start building our position? Well, the key here, and this is a big one, is to avoid going all in at just one price. That's not how the pros do it. Professionals build their positions in layers, or tiers. So we start with a 40% allocation at the current price. Now, if the stock pulls back to these key levels, $60, $58, $55, we don't see that as a problem. We see it as an opportunity to add to our position at even better prices, following our predetermined plan. You see, we're not trying to perfectly time the absolute bottom. That's a fool's errand. Instead, what we're doing is building a much more resilient position with a fantastic average cost right around $60. And you know, psychologically, this is so powerful. It completely changes your mindset from, oh no, did I pick the perfect entry, to I am systematically building a strong position at a great value. It just takes all the emotion and the pressure right out of the equation. And now we get to the most important pillar of them all. Seriously. Anybody can get lucky and pick a stock that goes up. But professionals, they survive and they thrive by knowing exactly how to manage their risk when they're wrong. This is all about defining your failure point before you even think about placing the trade. You've basically got 2 primary options here, and it all comes down to your personal risk tolerance. The conservative stop at $53. Well, that limits your maximum loss to just under 15%. The more aggressive stop down at $45, that gives the trade a lot more room to breathe, to handle volatility, but the trade-off is a larger potential loss. Look, neither one is right or wrong. They are simply choices you have to consciously make before you enter. These right here, these are the non-negotiable rules. I want you to burn them into your brain. Why? Because these rules are the circuit breakers. They protect you from your own worst enemy in trading, which is emotional decision-making. Sticking to these rules, no matter what, is what separates the pros from the amateurs, period. Okay, so we've got our entry plan, we've got our risk defined. Now, how do we get paid? Professionals don't just sit around hoping for a home run. They have a systematic plan to cash in on their profits as the trade works out. We call this the profit-taking cascade. Our first target is $75. The moment the price hits this level, we sell a portion of our position. This does 2 critical things. 1, it locks in our very first tangible profit, which feels great. And 2, it gives us this powerful psychological proof that our thesis is on the right track. Now, Tier 2 at $90 is a huge strategic milestone. The goal here is to sell enough of your position to get your entire initial investment back. Think about that. At this point, every single share you still hold is effectively house money. You are now playing with pure profit, and that completely changes the game. Tier 3. This represents our estimate of the stock's actual fair value. As we get close to this level, simple, prudent risk management tells us we should be cashing in a big chunk of our gains. Letting a huge winning trade turn back into a loser because of greed is a classic amateur mistake, and it's one we are going to avoid. At Tier 4, the stock is now reaching a valuation that's on par with your average company in the market. The easy money has been made. The strategy here is simple. You reduce your position down to a small core holding because you've already banked the vast majority of the profits from this big move up. And finally, we get to Tier 5, the speculative hold. For that small remaining part of your position, you just let it ride the trend, and you protect it with a trailing stop loss. A trailing stop is just a dynamic stop that automatically moves up as the stock price goes up, but it never moves down. It's the perfect way to protect your gains while giving a massive winner all the room it needs to run. So, we've laid out the entire professional playbook, from start to finish. But here's the thing. A strategy is completely worthless if you personally can't stick to it. So now, we're going to turn this framework around and help you find the profile that best fits your personal trading style. What this shows you is that there is no single right way to execute this trade. The strategy is flexible, it's adaptable. You can go from a very conservative approach with tighter stops and closer targets, all the way to a speculative one with much wider parameters. The key is to align the plan with what you can handle. Think of this table as your cheat sheet. Find yourself on this chart. Are you a conservative investor, happy with a 1 to 2.5 risk reward? Or maybe you're an aggressive trader willing to take on more risk for that potential 1 to 4 payoff? All the parameters are laid out for you. Your job is to pick the one that fits you and then commit to it with absolute discipline. And that really brings us to the core lesson of this entire masterclass. We don't have a crystal ball. We have no idea for sure if this stock is going to go up or down. But what we do have is a plan for what we will do if it goes up and a plan for what we will do if it goes down. And you know what? That is the entire game. The playbook is right here. The strategy is crystal clear. But just knowing this stuff, that's only the beginning. The real question I want to leave you with is a personal one. Do you have the discipline to actually execute this plan, especially in the heat of the moment, when your emotions are screaming at you to do the exact opposite? Because that right there, that is what separates the pros from everyone else.